I want to welcome everybody to how to plunder the pre-market with a London swing trade. My name is Ted Posobiec. Hey, Frank. If you'd like, I'd like to know where y'all are from. If you could type in that and what do you like to trade? Futures, options. I'm a futures trader mainly nowadays. I do a dabble occasionally in ETFs. Rio, Forex, Mexico, New Mexico. Gary, Thomas likes Forex. Michigan. Oh, that's where I'm at. Whereabouts in Michigan? Denver, Colorado. Equities, options. Michigan. A lot of people. Hey, that's good. Grand Rapids. I'm in Coopersville. D. Great. Let's get started here. We'll get started with the disclaimer and take a look at this. I'm sure you've seen it several times today. I am not a financial advisor. I am a full-time futures trader, like Dan has mentioned. Just remember there is risk in trading, so don't trade money that you can't afford to lose. We'll get into how to eliminate that altogether of your own money. What's nice about this here particular trade is, are you unable to trade during normal market hours? Some people are. I get up prior to the market opening for a particular reason. Millions of people would love to trade the market but can't, usually because of a 9-to-5 job or some other reason that keeps them from trading during prime hours. If that sounds like you, then stick around because I'm going to teach you one of my most reliable pre-market trades. First, let's talk about the biggest obstacle that faces during the pre-market hours. Does anybody have any idea what that could be? What kind of obstacle would you have trading prior to the market open? That's right, Chris. Tom, same thing. Low volume. Volume is much lighter during the pre-market, that it can be difficult to identify commitments from buyers and sellers. It's sleepy, exactly. Most traders waste their time searching where to look for good pre-market trades. What you really need to know is when to look, and that's what I'm going to teach you today, is when to look. I've discovered that the best pre-market trade setups are based on the London Open. I'm sure there's a lot of other people that will do the same thing, which the London Open starts at 8 a.m. In London itself, which is 3 a.m. Eastern in the U.S. Don't worry, you don't have to get up at 3 a.m. I don't. Occasionally I do. If there's some news coming out, maybe I can't sleep, I may get up and take a trade or two around 3 a.m. I'm hardly ever up at 3 a.m., but when I do get up, it's usually around 6 or so, and I start drawing support and resistance lines on my charts. This is all based off the London Open. These levels are extremely reliable because traders from around the world participate in the London Open every day. The second part of this trade is to identify swing trades that happen at these support and resistance levels. When you put the two things together, reliability of price created between the start of the London Open and before the U.S. market opens, and easy to identify swing trades that happens at these levels. you have all the ingredients that you need for a reliable setup that I call the London swing. I'll show you some of the I'll show you some examples here in a minute. But first, who am I and why should you care what I have to say? So let me introduce myself in case you didn't already know me. My name is Ted Posobiec. I'm just a regular guy like anyone else. I was a commercial diver for 20 years. That's actually me there at the bottom, establishing a downline so we can get back and forth. We did have ROVs working with us. Probably one of the best tools that I had ever come across was the ROV. I like to ride motorcycles, as you can see. I've been trading stocks for almost 18 years, like Dan has mentioned. Not so much anymore. Most importantly, I love the lifestyle that comes with being a day trader. Before day trading, I used to work 10 to 12 hours a day. Today, my idea of full-time is 2 to 3 hours a day, and I get to focus on what's important in my life. I host the E-mini Insider Trading Room at WINvesting Monday through Friday, 8:15 to 10 a.m. Eastern Time. Here's what one of my students had to say about me. Ted Posobiec is a phenomenal trader and coach. He is truly driven to help his students achieve their personal goals. I was treading water with my trading for a long time, taking one step forward and 2 steps back. But Ted has helped me turn that around by building on solid fundamentals. It's pretty amazing how quickly an account can grow when you're consistently profitable. Out of the last 20 trading days, I've had 2 losers, 2 break-even days, and 16 winners. My account is up over 50% in 30 days simply by cracking out base hits. Pretty exciting. Wouldn't have happened without Ted's help. Rick R. from Wisconsin. Well, that's enough about me. So let's get back to the London swing, and I'll show you how this trade will help you plunder the pre-market. I'll trade this anytime after 3 a.m. Eastern Time. All my times are set up in Eastern Time. And up until the U.S. market opens, which would be gold 820, CL or oil at 9 o'clock, ES, YM, NQ 9:30. So if I'm looking at any of the markets for the London swing, I'll run that from 3 a.m. all the way to their market open. With this, I have not changed the time. Europe has gone to daylight savings times. I still leave it at 3 a.m. I will take a note where the market actually opened, but I keep everything right at 3 a.m. and don't worry about it too much. If we're going sideways, it's not really going to matter much. Once we start trending, then we're going to find out that we'll have some levels here. We'll take a look at that in a minute. All times are referenced in U.S. Eastern Standard Time, New York time. Just keep that in mind. So you may have to adjust wherever you're from. Here's what you'll learn today. What is the London swing setup? Which markets I trade using this setup? How to know which swings are important and which you should ignore. We'll go over one of my favorite charts, how to master the trade in market replay. Before the London swing sets up before the U.S. market open, like I say, the setup can be 3 o'clock is where I'll start that. Metals and interest rates open at 8:20, and I'll run that all the way to 8:20. I've already mentioned that. Energy open at 9, so I'll run that from 3 to 9. Equities open at 9:30, and I'll run that from 3 to 9:30. Remember again, all my times are in Eastern Standard Time. I just want to make that clear. Like I say, if you just adjust it to your time frame. I start looking back early in the morning. That's when I get up. When I get to the office, I actually get dressed and come to an office. I don't trade at home. So once everything is running and I'm done scanning emails, doing anything on Facebook or whatever, I'll start get the charts up, get everything running, and I'll start marking lines on the chart. If you don't, like I say, you do not have to get up at 3 a.m. For this trade. If you want to start trading at 5, that's when you'll start marking your lines at 5, 6, 7. Any of that is fine. I mark the highs and lows of the market at the beginning from 3 a.m. Eastern, even if I don't start trading until 5 or 5:30. Does everybody understand that? I'm not up at 3, but I go back to 3 o'clock to find the highs and lows. That's what I'm doing. I look back and at additional high-low levels after a pullback. This will be a little clearer once I show you on the chart. Here we have a chart, a tick chart. I do use a tick chart on this. And right here is when I get up. Computer is on, ready to start looking back. I place my high and low. We have an initial drive, then we have a push down. So here's my high. I don't use the wick of the red candle, I only use the green. Then we have a push down, I get a pullback. I place a line. We get a push down, pullback, I place a line. We get a push down, I can add another line here. I'm using the whole candle, including the wick, if there's a wick. After the London market opens, this trade may set up very quickly within 5 minutes, or it can take a few hours to set up. That's why I'm not in no big hurry to get up at 3 a.m. to take this trade. It'll happen at least once while you're up, regardless of the time, maybe several other times. So there's no need to get up at 3 a.m. just to put some lines on and wait. My chart setup, I use a session template of 24/7 on this particular chart. I use NinjaTrader as my trading platform. Here's what the setting looks like on the session template. You can see the default 24/7, so that it gives me a total running time. There are some trades that I'll use a session break when the market closes, but for the London swing, I want it to run 24/7. I like my charts clean. I'll be using the following indicators on this particular setup. I do have other indicators that I do use. We get into that more into the course, but you don't need it. What I want to show is using it without any added indicators. If you can use your drawing tools, you can do this trade setup. I do like a tick counter, and I do like my toolbar shortcut. So let's make some charts. All I'm going to do is I'm going to go to File, New, Chart. Let's take a CL. I trade mostly in the morning, CL and gold. Getting the chart made up, chart, CL. Already, I have a regular chart is set at 30 minutes. This is my default. I need to go in and I'll change the bar timer, remove, and I know I need a tick counter. Tick counter. And let's go to a 610 tick chart. That's my favorite chart. I do use different charts. I can go all the way down from 610 all the way down to a 144 if I see that I need to do that. And my drawing tools are here, so I don't have to learn the shortcuts. I'll be using this line and the horizontal line. The vertical and horizontal lines are all I need to use on this particular trade setup. So if the first thing I'll do, some of you may not know, some of you are in my room here, and what I'll do here to get this line in the right spot, I'm going to go, let's do this again. Double click this line, go to data, and 3, just type in the number here for the time, 3 a.m., hit OK. Now when you open this chart up, that was a good, that was very good. I could see 2, 3 trades right there. I was not watching that. Remember what I did at 3 o'clock, data, put in the time here, and hit OK. So here we have the 3 o'clock is when it starts. Yeah, I'm going to make that a little thinner for myself because I want to see if there's wicks. There's no wicks. We have the initial drive. Move it over one. We have initial drive to the upside. So what I'll do here is I'm going to place a line here. And I'll place a line. This red candle pullback did pull down lower, so I can put one here. So does everybody have the chart? Pretty simple. Data series, session template, 24/7. That'll load up. And we're right on. PW, I'll get to that. I'll get to what I'm doing here. We're going to do some market replay and get into how I'm marking these lines. Well, you can see the first thing I did is this right here. I do like to know what the initial drive up is, and I'll change that line to a dash line, and I want to know what the initial drive down after the pullback, if we get one. And I'll usually put that as a dot, dash dot, but any other line that I put in will be these lines, just solid lines. This just lets me know that this is the initial push up, and this is the initial push down. So let me go ahead and give you some examples of a short, the London swing short. Here we have a chart, a CL chart. You can see I've got the 610 up there. This here is the London swing indicator that I have that helps mark the highs and lows of the session. That comes with the course, and there is a 50 EMA on this particular chart to help define trend. Some of the other indicators I may or may not have on my charts. It just depends on how crowded they look at the time. The first thing that usually goes is the pivot points. But what we're going to do is, I'm looking at it. I used to get up about 5:15 in the office before 5:30. So the first thing I want to see is the initial drive. I'm up right here. I have the initial drive, and I have a green candle pullback. So now I can place my line here at the low. I think I went too quick on that. Initial drive again. I have a green candle pullback. My line comes in. Once the line comes in, I look for a break down below it, a pullback, and then I'm coming in short at, if that's 52, where the line is 52, this here is at 53. I'm going to come in 1 to 2 ticks below this line for a short. Here we have the initial drive, green candle pullback, placed my line. We have, so you can see, I wasn't up here, but I keep scanning back. We have the push down here, pushes down again below this line. We have a pullback. I can place a line down here, but with this one here, push down, pullback, this candle here closed below. Now I wait for a pullback above, and 1 to 2 ticks below this line is when I'm going to get in. Looks like I did not make anything on that particular trade. Right here's my short going in. And we'll take a look at the London swing for a long setup. Here's our initial drive. The drive is going up. I have my pullback. Now I'll place my line in. Again, I'm up looking at it around this time here. The initial drive. Pullback candle is red. Now I'll place my line in. We get the close above the line. I get my close below the line. If I'm up right here at this time, place the order 1 to 2 ticks above it. I get in after this candle closes. The candle has to close before I can get in because it might come up. I want to make sure that that's closed. I'm in. My ATM, Automated Trade Management, I have several different ones depending on the morning and what the market has done prior. Let's go to a ATM strategy. I like a 3-5. Here's one. 7-tick stop with a 3-tick target and 5-tick target, or I'll have one that is set up with a 3, 5, and 5. A lot of times I like the 7-tick target, 7-tick stop with a 7-tick, a 5 to a 7-tick target, and a 10 to 15-tick target. Every day is a little different. Depends on how much I'm willing to risk that particular day or into the week. There are times that I'm willing to risk a little more, especially if I'm up quite a bit. But for the most part, 3 and 5 get $80 in the morning. It's a real good start. That's what I recommend you starting out with. And then as you get better, I've got one guy that does the London swing here. He is a funded trader now, and this is what he uses. He uses a 3 and 5 tick target, and I believe he uses the 7-tick stop. That's just one of several different ATM strategies that I have. So we'll probably use that for the market replay. So let's go ahead. I'm going to try to do this. If it doesn't, we'll have to do regular scanning through the charts. You'll be able to see how I do this in the morning when I'm trading live. Let's go to escape here. Seems as though we have the chart up here already. Let me go ahead and get the connection I need to disconnect and then reconnect to market replay. you can run this London swing into the regular market hours if you like. Let's go ahead and do this, and let's say I get up at, I'm in the office at 6 a.m. So I'm in the office, open up my chart here. First thing I want to do is grab my line, and I'm going to double click that, go to data, and 3 a.m. Right in between here, and I'm going to start placing my lines. Here's my initial drive was to the downside. I don't have a drive up yet. What has to happen is that this line has to be broken. I have to have a push up with the green candle here. It can be a wick, but it's got to be, it comes up here and breaks it. So I can't use that as my high for the day. I can short that, but I can't go long. Can't place a line there yet. So usually I'll remove it, or I'll just put it up there and know that I have to move it later. So once I have this line here in, I will lock that. I want to know when we come back to that level. Remember the steps. I get a push down, pull back, I place a line. I'm up here, so not anything that happens here doesn't matter. I cannot take, I'm not going to go back and take these trades. So we have another push down, another pull back, I place the line. Follow the price, price push down, I get a pullback, I push in, put in a line. I don't like to have a lot of lines out, so what will happen is if I get too many lines out, I'll go ahead and start bringing them from the top and bringing them down, because right here is where price is at now. We get that pull down here, pull back down here. We get one here. We've got one here. So I'm up here. So now that what I've got, price comes down, closes below it, pulls back, closes above it, closes down below it, pulls back above it. If I was up at this time here, 3 and 5 ticks would have worked. Looks like it anyway. 1 tick. There's 5 ticks. Closes back above it. Once you get a big move, I will normally wait until I get another push down, pull back, and then I would enter here. What CL likes to do, CL likes to run, pull back, maybe run again, and then go sideways. Then it may continue on. So I'll wait 2 or 3 bars in the middle here before it goes down. This here price comes down. You can see it come down, pull back. It closed below it. I'd have to wait for it to close above it, and then I'll have an order sitting in here. Let's run this. We have a close below here. We got a pullback. I'm up. I would already coming in. Let's get the ATM up here. Yeah, let's do that. 3 tick, 5 tick, and a 7 tick stop. Now I could use a 5 tick stop also, but I'm willing to risk this. Once that ATM is up, place the order 1 tick below. I'm got it 1 tick below the line. And we'll speed it up here. If you're running market replay, when you do market replay, I really advise you doing it at regular speed. What I mean by the initial drive, it is That very first candle is the initial drive, whether it be up or down. This, from 3 a.m., this candle here, the initial drive was to the downside. Now, the initial drive coming up, let's say that this candle here popped up here. This is the long side. The initial drive, I'm looking for shorts here really. This one here, I would be looking for long, but it does have to break the high of that very first candle. Or if it's a short, it'll have to break the low of it. Just that very first candle is the initial drive. We'll speed this up. If this closes above up here, it's got to close above it. Then I'll bring this order in and bring it one tick below this line here. There are other methods that I have that could have possibly got in a little better than that. But as for this particular trade here, this is what this is set up. I'd rather have that stop above this line. I'd look to the left. There might be a target further down here that I could go for. There's the 3. I'll lock it in a tick. I mean, bring my stop down one tick. And 5. Let's slow that down. How far did it actually go? $80. It looks like it went down 10 or better. 13 ticks. Yeah, well, I would prefer we did have a pullback here. Take a look at this. I'm not saying it was the best entry. It is for this particular trade. We did have a pullback. Market came down, pulled back. I'm going short here. If you take a look to the left, there may have been a reason why to get in or get out. Let's go to gold would be the next one on this particular day. I usually have both the charts up at the same time, and I can take trades at the same time on this. Yes, this does work during regular trading hours, Lee. This is what I use when I'm trading prior to the market open. This is what I like. And again, I'll go ahead and place my vertical line in. I want to know where 3 o'clock is. 3 a.m. in the morning. We have a initial drive here would be to the upside on this one. You can see that right here, the initial drive. Initial drive there. Waiting for a candle to come down below that initial drive candle, and it's this one right here, so I can put a short area here. So I can look for both long and short setups as long as all the rules follow. So a dash line on the top, and my short side, I will put a dash dot. Both of those can be locked in because they're not going to change. They don't change at all through the whole day. They'll stay the same. Ones that I don't lock in are these here that are coming in like this. We have, we just missed this one. We have one way up here. So the price pushed up, pulled back, closed above it, came back down below it. My entry would be right here as it goes up. We'll keep the same ATM. I'd prefer to use a 5 and a 10 on gold. Let's do that. 5 and 10, 7 tick stop. I have a London swing ATM that I like using, which is a 7, 7, 7, and 10. We'll stay with the, well, we'll use that one. Market's going here. What I'm waiting for is a push up above this, or I want it to come back down below and close below here. We'll speed this up. Anybody have questions on this? Regular trading hours, I have, let's slow that down just a little bit. We had a close below the line, missed this one, it was going too fast. That's why you should do it in regular time. Let's see if we get the next one. Still would have a long setup here. Don't have a close above the line here yet. ES, I do use this on ES. I leave them on, but I'll move them if I have too many lines on. I'll move from the bottom and bring them up to the top, or from the top bringing it down. Just because I only want to see what's going on right now. I'm trending up. What I really like about it is knowing that the trend is going up. We do have a trend. I'm not looking for any shorts here at all. I'm looking for the market to move up. The only time I'm looking for a short is if it breaks down below this line here. It's got to break below this, pull back, and then bring it down. I don't particularly care to take any trades down here, back up, but if I'm going to get a pullback, I want it to pull back quite a bit down here to take this one. I don't like to see it just close one tick below it. But up here, I'm willing to look at that one tick below it to take it to the upside. Take a look at candlestick patterns at these levels here also. If you're into looking at head and shoulders patterns, this is the area where you want to see it, not down here. Price gets back down here, it's pointless. Head and shoulders at this level, not really. You'd have to wait till it gets down here, maybe here, but this range here is too narrow. You want the extreme high and extreme low for a head and shoulders pattern. You can go back and do the back testing to see how well the lines work in between and make up your mind whether you're going to use that particular trade or not. We have our close above the line here, waiting for a pullback now. Now I'm looking for a long in this area here. New line. may use different, a smaller chart, tick chart if you like. I have checked this out on a 5-minute chart. It works very well. And looking at it on a 1-minute chart, thinking that I was looking at a tick chart, I have taken them off a 1-minute chart also. It is not a breakout trade. I wait for a breakout, pull back, and then get in. Yes. This here was a trade to get in, this one right here. Some of my students will take the trade on a touch to go up. I have not wrote my rules up to do that, so I don't take it that way. There was the tap below it. Was right at it. Actually, it was on it. It's right on it to take the trade to the upside. Oh, I missed that one. Let's go to the entry, a good entry here. If you take it off the line, that's something that you'll have to back test and do yourself. Let's see what we did here on this morning. First thing I'm going to do, let's go in at 7 o'clock. First thing I want to do is I want to put a line up. Now my indicator does this for me. I don't have to do this. So I want to go to 3 a.m. What I'm showing here, you guys here today, ladies and gentlemen, is that you can go in and if you write these rules down, the method, you can try this out tonight, market replay, go back test on some charts for yourself. We have the initial drive to the downside. It's around 7 o'clock. Initial drive, come on. Initial drive down. So what I want to do is I want to put a line down here. And we have the pullback, so I can go ahead and lock the line in. Then I get a pullback right here. And I can go ahead and lock that line in. Do we have a setup for a long? Do we have a setup for a short? We do not have a setup for a short. Do we have a setup for a long? Why not? Everything is came in. We have a push up. We have a pullback. We have a close above it. It does come down back below it. It doesn't close. So I don't have anything in this area here. I got a close below the line right here. So I have a setup right here. 1 to 2 ticks. There is a setup. It's at 96.9. I'm going in at 97 even. When you run this in market replay, if you do it at regular speed, you don't miss the trades like it's trading sideways. It has done that for a while here. When it does this, if you take a look at how long it's been sideways, I'm going to say it's going to want to go. It's going to break up. Now, if we get a price move down here further, I'm going to bring this order in and drop it down here, but it's got to close below this line. I know some people won't take these trades. It's trading sideways right now. But what way is the trend going? I like it. We're trending up. We got a short-term trend down. It's gold. Looking at gold. If it comes down here, I'd really like to get in. It would feel better by getting in down here. But that trade is set up with my rules that I have set in. I'm fine right here. I've got 7-tick stop, 7-tick target, and a 10-tick target. Come on down, push down below here, close, so I can get in down here. But I got to remember, it's got to close below it. It only has to go 1 tick and close below it by 1 tick. All right, it's either going to work or it's not going to work. And I don't want to risk any more than 7 ticks. Sometimes I'll just use a 5. And I will start tightening in a trade also. And I'm out. Tapped up, got me in by 1 tick there, 2 tick entry. May have been a little better, may not. As fast as this candle was moving up, and even at double the speed, with regular speed, it would have been going pretty good. I do like the trade there. We do have a decent pullback. And I'm never afraid to get back into a trade. There's 2 examples. I will take this on an NQ YM trades also. I usually use a little something different. Let me put it this way. If it works on NQ, it's going to work on YM and ES. They follow each other. Got some questions here? Yes, this up here, there is a new entry line up here. It's got to break above it, pull back, and come back down. Does that make sense? Yes, as long as the pullback, this one here would not be. Right here, we have one right here, and you have one right here. This would not, because it's a red candle. I don't use that. I can trade, and I have traded these lines through the US session also. Yes. But there's another trade that I will use. It's called the 610 trade when the US market opens. And if we're trading inside this range here, right here, then I can trade these lines. But if we're outside this range on either side of it, we are. I like to start with a new set of lines. But these lines can be used all day long. Lee, what about the last 7 bars prior? One from here. This one you talking about? I don't put a line there. I'm only going in the direction that the trade is going. 3 green bars. In a row. That line is already in here. This line, I might not be understanding what you are. That line is already there from this move. This line here is already right here. It's tapped that line. I'm waiting for that to go above it, pull back. No, it has not done anything good. I'm not going to place lines in here, in between this one and this one, or from the outside to the inside. I do not trade. I do not do that. Pull this up. Today I've shown you the basics of the London swing trade, but that's only the beginning and the tip of the iceberg. There's too many other factors to go over in just in 1 hour, which is why you're invited to join me this Saturday, for a 3-hour live workshop where I'll teach you everything you need to know how to master the London swing trade. The London swing trade live workshop, again, Saturday, November 5th, 10 a.m. to 1 p.m. Eastern Time. Here's what you'll learn in this course. There's 9 trading modules, how to trade the London swing in 4 different markets, GC, CL, NQ, and YM. Like I say, if we're trading it on NQ and YM, it will work on ES. The best setups for each market, different setups, different charts maybe. It just depends. We get into a lot more there. Minimize your risk with automated trade stops and targets. We'll be going through some of those. Lock it in. Lock that profit in. Multiple trade examples of both long and short setups. 3 charts you'll need the 3 charts you need to set up your workspace. How to enter, exit, and manage the trades. Personalized feedback to get all your questions answered. This is all backed by a 90-day action plan for what to do after these classes. We will be recording and this all will be turned into an online course. So when you're coming in, you're getting in on the ground floor here. We're recording it live, and then we're going to turn it into an online course. When you register today, you'll get the 3 following exclusive bonuses. The bonus 1 is a custom London swing indicator. That's this right here. Marks the highs and lows for you. So once I know where the highs are, I can just start going above, below the lines to find out where the swings are. It's set up so you can add more than one time frame to it. This helps eliminate guesswork, draws the highs and lows automatically, and highlights what areas to focus on. It has a shaded in feature also. This is a $500 value. Bonus 2, how to trade other people's money. Very good. Learn how to do this and not risk a dime of your own money. Learn how to trade other people's money and stop risking your own hard-earned dollars. How to choose the right prop firm. Discover the rabbit bunch strategy for passing the test and getting funded. This is a $99 value. Bonus 3, 610 trade. Similar to the London swing, only we're using a 610 tick chart. This one here goes from the London swing into the 610 trade at the market's open. Each individual market is starts at that particular time. This is a powerful trade I use every day. Transition from pre-market to post-market open. Learn how to make 10 to 50 ticks per trade. This is also a $300 value. How much is all this worth? I make an average of $155 a day on the London swing trades with a 72% win rate. That's what I net after commissions and losses. At 20 days, at 20 trading days per month, that adds up to about $3,100 per month. If I price the system at $1,500, it could easily pay for itself in 2 weeks. But I'm not going to ask you for $3,100 or even $1,500. When you sign up today, you'll get the live London Swing Workshop this Saturday, all the bonuses, and full access to the recorded course when it's ready in 6 to 8 weeks. Just for $297. You can register now at www.winvesting.com/swing. I'm so confident that you'll find success with the London swing that I'm going to take all the risk on me. Backed by my 90-day, 100% no BS action guarantee. Sign up today. Check out the entire course. Trade at least 1 day a week over the next 3 months using the strategies taught in the workshop, starting with just $5,000 in real or simulated trading account. After 90 days, if you have not generated at least $1,500 in real or simulated profits, show us the proof you took the action above to get a full 100% refund and investment of the work in the workshop. If you haven't already signed up, maybe this will help. How'd you like to learn to trade live with me next week? Here's the deal. I want to help you succeed, and you'll learn faster if I'm there with you to answer the questions and coach you through the trades. So if you sign up before Saturday, fax action bonus for the first 15 only. Get 3 weeks in my trading e-meeting insider room. Trade live with me Monday through Friday, 8:15 to 10 a.m. Eastern Time. See the London swing trade in action in a live market. Get all your questions answered. There is no auto renew, there's no strings attached. Register with me. Register at www.winvesting.com/swing. Just 1 or 2 winning trades can easily pay for the course. Don't delay because the clock is ticking. This special office expires in 48 hours. That's just in 2 days. Remember, when you sign up today, you get the 3-hour London Swing Live Workshop plus access to the recordings online, 610 trade course, how to trade other people's money, 3 weeks live in my trading room. TradeStation, yes, this will work on TradeStation. The indicators will not, but what I just showed you today, you can use those drawing tools. That'll work for you. Have any? Hey Ted, I have not really looked at it on ZB, but I will. Usually pre-market, usually I don't get. There's even less volume there. There are occasions when it does go over. Hey, see you later. HE, thanks. Yes, it'll work on any chat platform that you can get tick charts and you can use drawing tools. No, you do not have to use tick charts. Like I said, I have taken it on 5-minute charts. That works fairly well. And I have accidentally taken them on 1-minute charts, not knowing, because I don't care if I see a setup and I have some lines drawn in, I take that thinking that I'm on a 1-minute. I think 1 minute might be a little too fast, but 5-minute does actually work fairly well. I like the tick charts. I like to get rid of a lot of noise. I use a 1-minute chart for volume spikes. Do we have any more questions? I really like to see you come on in the room. Give it with trading other people's money. You don't really have anything to lose there. I've had several people that have traded with me past their funded account using the same indicators. Let's go ahead. Let's bring this chart over here. We'll use the one here with the somebody asked about ZB. Okay, initial drive, that doesn't look too bad right there. Initial drive is to the downside. We'll take a look at ZB here. Pushes down, we get a pullback, I put a line in. You see the pullback. It pushes down again, I can have a line here. Let's say I get up. That ain't right. Let's start that over. That's for 3 a.m. And let's go to a live chart. There we go. Not bad. Now here we have, it's a little different here. We have initial drive to the upside. We get our pullback, and I'll place a line here. And I'm up usually around 6. Sometimes I'm in a little earlier. We have a line here. Now, like I said before, some of my students will get in on the pullback to the line. Doesn't have to come in, and then they're in right here. They could have been right in here. I prefer the close below the line. Three ticks on that. 3, 3 ticks, 5 ticks, would have at least got my 3, possibly break even on there. Right here is where my entry would have been, right there. 1 tick above the line. Closes down below it. We get the close below this line here. I'm in. I'll go long. That did go up 6 ticks. I do not have a close below the line here for a short. Let me move some of these lines out of the way. Want this clear so that you can actually do this. See the bottom here where that green line is? Once price goes below it and I get a pullback, right here is my line for the short. Now this is going in after the market open. No reason why you can't go. Let's take a look at it on a 5-minute chart. Initial drive to the downside. Then we move up. You can see the lines aren't off by that much. 6, 10, and 5-minute are really close together. Don't get nothing here. Get the close below it here. There we have that 3 ticks again. Same candle. That initial drive, what I'm looking for this initial drive, I don't count the dojis, so I wait for the next candle to push down and get a pullback. So I'm not using it right there. I'll push it down here. The question is, again, your initial drive dictates to take long or short. No. With the initial drive is just letting me know what direction the market decided to take off at 3 o'clock. This one went down, and it's the first candle. It does push down a little bit. At one time at the market open, that initial candle was the indication of what way the market was going for at least the first 30 minutes. But things change with that. I'm confused on this trade. If trade up, do you only take the trade up? Follow me. We have maybe this is the initial drive is down. The opening candle is down. I wait for a green candle to pull back and I put my line in. I cannot take a short until I get a close below the line. I personally want the close back above the line, and I'm getting in short 1 to 2 ticks off this particular line. What way is the market moving here? The market's moving up. Market's moved up. I get a pullback. I wait for a close above the line. I wait for a close below the line. I'm getting in long right here. Market moves up to this point here. I get the pullback. There's a line set here. The line goes above. We're above it. Don't look like it's closed below it. It doesn't close below it till right here. So I'm looking for a long here. At this point, we get a close above it, below it. I can wait for a long here. Price has, for this move down here, that line there, price has not closed below it. It closed below it here. So now I need a pullback above it. Has not closed above it, but I have a line here. And here. Could be trying to get short here at 10 o'clock. I would not be trading this any later than that anyway. if this is the immediate trend right here. This would be the immediate trend down, but I'm looking for when price breaks above the line, I want to go long here because we are starting to go up. I don't know how much clearer I can make that. Did I clear it up for you, Ross? I hope it did. To me, this is a very easy, to me, I guess because I've been doing it for a while, but even when I started learning the trade, when I had a line here, and I know that because I used to do breakouts, I'd be waiting right here. And, you get in just to get taken out. I'm going to get in here, comes up, and it does nothing. And for me, that's a long time. Usually, the reason why I don't take breakouts is because usually they do not work the first time around. What would be initial drive, initial candle is down. All I want to know is what that first candle did. Did it go up or down? So I can place my first line. If it goes down, I know I have this line here. Once it goes above this close of this or the open of this candle, I have right there's my range. Sometimes that range can be even one candle, or two candles rather. Yes, it's the second time it goes through. Now, again, remember that if I really advise you to go back and check it, because sometimes these will pull back, tap the line and go up, and you may miss it. But I have found over my back testing and my live rules that they tend to be less frequent than more frequent. That's why I wait for the pullback below the line and back up. Now, there might be some other reason to get into the trade a little earlier or not take it at all. That's what you'll learn in the course. I have a set of rules wrote out for the trade. Give you the rules to the trade in this webinar, but they are written out. That comes with the course. It's really, really simple. Find your low for your first push down, first pullback. There's your low. Then if you get a higher, a candle push higher than the initial low side, you move it up. And the opposite is if this here is your first push up, then your first push down doesn't come down and doesn't break this low here until this candle right here. I don't get a pullback. I need a green candle pullback, so that's where the line would be if we started right here. So that would be your first push down. Yes, this initial candle, if this here keeps pushing down and it's red with no, and I have seen it, with no pullback green candle, this first candle is your push down. Then I get a green candle pullback right here. this is where that line would go. I need that pullback. Same way for the upside. If this here was the, clear this. If this was our start of the day, see the push, it pushed up, I don't get a pullback here, right there's my first candle. If this push kept going up, these were all green candles, and then this candle pulled back, that would be from here. That's where I'd place it. And the time that lapsed by is, you know, over an hour off that particular chart. We have any other questions? I hope that helped you out a little bit. That was on ZB there, so looking at that, I could take that in the morning. Usually I'm watching CL and gold in the morning that early. I have trades that set up at known times, 8:20, 8:30, 9 o'clock, 9:15, 9:30, and knowing those times when I know I have to be looking at something else. In between those times, I'll be looking at the London swing or 610 trade. I know when I want to trade. I know when I'm sitting here looking for things, I'll look at, prior to the market open, I look at the London swing. Did that clear it up for you, Charles, Ross, Michael? Cookie. Yes, this is being recorded. You're welcome, Michael. Charles. You don't place a line in until you get a pullback. When you get a pullback of the opposite color of whatever direction it is, that's when you place that first line. This is for, that's when, Dave, that's when the London swing is when I start the European Open. It's the Open. You can run that all the way to the London close if you like. One more question here on this. On a time chart, this is done the same way. The candle pushed down here. I have my low right there and my first push up right there with the pullback. Comes down. I do not use the dojis again, so the push down, I get a green candle pullback, I put a line in. If price starts moving up, it's got to break this first, that initial candle, the opening candle. It pushes up, wait for a pullback, I put a line. Pushes up, price keeps pushing up, I get a pullback, I place a line. I want to thank everybody for joining me today. Remember, Saturday, 3-hour webinar. We'll be going over everything, the nuances, several different charts. Register here at www.winvesting.com. Swing. Again, thank you all for joining me today, and I can the London Open is 3 a.m. Eastern Time. Sorry, Dave. Thanks a lot.